Here's the beauty of Donald Trump, is he sees the world in very, very simple terms. He knows that the United States has been China's patsy for decades. We're just a palooka to them. And he knows that he's got to correct that imbalance because we have a $113 billion a year trade deficit with China alone. And it's very fundamental. They have a closed, controlled economy, and we're the exact opposite. So he knows that he's got to cut new deals to get them to open up their markets with 1.4 billion consumers and a growing middle class. Only 10% of their population is middle class right now, and it's going to grow over the next few decades. So Donald Trump has got to start to send signals to them that says, no more business as usual, we will not be your patsy anymore, and it starts with every point of leverage he can find. If it's Taiwan, if it's trade, it's easy for them to put sanctions on U.S. companies because they control their economy. We do not do that in a free market economy.
Mercedes, I think Mexico and Canada on the NAFTA deal are going to fall easy. They're going to just fall right over. China's going to be a much tougher deal. And let's face it, I mean, when we start talking about trade deficits, essentially what we're saying is we give them $1 for something of value that we think is worth $1 or more. Typically, it might be something made of cheap plastic, but we do it anyway. So how do we fight this war? How do we say to the American consumer, tighten your belts, buddy, because that flat screen TV that you were going to buy for $400 may be $800.
Right, and you know what, Charles, it's complicated. Obviously, what we're seeing is that every time there's a diplomatic discord with China, what do the Chinese do? They slap on these regulatory sanctions on companies. They want to be the predator eating the prey, and they believe that the U.S. that we're the prey. But I mean, I agree with Mark. It's a very lopsided relationship. We need to put the pressure on China, despite the fact that they might respond with either military exchanges or with just reducing the conversation with the United States. With that being said, I think the appointment of Governor Terry Branstad as the ambassador to China was a very smart move by Donald Trump. This is a man who has longstanding relationships with China, and actually there is respect there on that side. So I believe that America needs to be the tough negotiator and not allow China to bully us around.
Well, Larry, Mark made the point of China's economy, and it's growing. They do have a pretty robust middle class to the point where General Motors, which is the name people think they were referring to, out of almost 10 million cars, 3.5 million last year were sold in China. So it's an important market. Their stock was down over 4% today. So it already had an immediate impact on some of the names, and of course there's General Motors, Caterpillar, Walmart, Starbucks, Boeing, Yum Brands. I mean, the list goes on, and there are people's 401ks. How do you see this playing out? Because you understand really how this works.
Absolutely, Charles. This is just short term, day by day. This is all negotiation. They know Donald Trump is going to negotiate better than anybody else ever did because he's a businessman, not somebody in the government that did these terrible deals. So he's going to go out and talk about high tariffs. Is there going to be high tariffs? Probably not. China's going to come back and do all these other things to start to swing back at him. Is anything going to come out of it? Probably not. So what's eventually going to happen is it's going to be better than it is now, hopefully a lot better.
What does victory look like? What does victory look like? Them opening up their markets to us with fewer tariffs?
They're not going to open up their markets.
They're not going to do it? You don't think so, Mercedes?
No, I don't. I mean, I don't. I think it goes back to the centrally controlled economy. Now, with that being said, we have companies like Boeing, who are their top aviation investor. You have companies like Starbucks. It was the former CEO, Howard Schultz, came out and said that you're probably going to see more Starbucks in China than you're going to see in the United States. But the fact is that the Chinese government, they want to control the investments in their country. They're going to do what they can.
But also it's about labor markets. Yeah.
Right. So real quick, Mark, then, on this note, billions of dollars have left China over the last few years. Rich people in China don't want their money there. They're buckling internally because rich people don't want to be there. It's not a stable country. If Donald Trump's going to strike and strike now, how will victory ultimately look? Because I think he's got more leverage than they have.
He's going to have to force them, Charles, to deal with their labor markets and raise the standard of living, raise the living wage for their workers, because otherwise our companies can't possibly compete. We can't set up manufacturing in the U.S. if they've got it so much cheaper there. He's going to have to force them to agree to terms over the course of a long-term period to raise the standard of living for their workers, so that way we have a little more even playing field, because otherwise we just can't compete with those labor markets. That has to come very, very early in the process. But also, he's got to roll back back their growth in the South China Sea. They're building these.
That's a whole different thing. They're so belligerent, guys.
It's part of the picture.
We all know that. The good news, though, they had to spend like $70 billion keeping their currency propped up. That's what happens sometimes when you make it too low. Everyone wants to exchange it for something else. Thank you all very much. Really appreciate it.